Good afternoon, everybody. It's Jeff Jenkins and Eric Klayman again for our weekly Facebook Live broadcast. This week, we're going to talk about bankruptcy and taxes, different kinds of taxes. And if anyone ever tells you that you can't get rid of taxes in a bankruptcy, they don't know what they're talking about, because you certainly can. And we're going to talk about that a little bit. And it's a very complicated subject, frankly. Eric and I know what we're doing with it. We've been doing this for 35 years. We're both certified by the accountancy boards in New Jersey and Pennsylvania as instructors. We can give accountants classes about bankruptcy and taxes, and they can get continuing education credits. So in 20 minutes, we're not going to explain or go over everything there is to know about taxes and bankruptcy. We're just going to hit some major points. But again, the thing to remember is if you're behind with taxes, see a bankruptcy attorney. I mean, really, because it's quite possible that we could get rid of some of your taxes or lower what you owe. There's all kinds of things that we might be able to do. It's a lot better than calling some outfit in California and hoping after you send them $10,000 they're actually going to do something for you.
That's the truth, Jeff. We hear this all the time. It seems like Florida and California advertise, these companies from those two states advertise $5,000, $10,000, and they'll work out the IRS. Well, here's the difference what a bankruptcy attorney can do. Number one, we're using the law, okay? There are specific laws that Jeff and I are going to talk about, how we can help you if you owe income taxes, how we can work on payment plans if you owe withholding taxes. And we're going to talk about that. But the law prescribes savings for you as the taxpayer who owes money. Number two, if you owe money in taxes, you may very well have other debts. Before you contact these tax service organizations who just have blinders on and just talk to you about taxes, talk to Jeff and me. And we can talk to you about
all your debts.
Soup to nuts, everything. So we'll give you a comprehensive plan to discharge, legally forgive taxes and other debt. So the phone calls on the bottom, the phone numbers on the bottom. We really suggest if you owe income taxes or other taxes, call us. No fee for the call. And we'll speak to you about it. And believe me, it's much better than spending $5,000 in those companies Jeff was talking about.
Absolutely. I don't know if you can see the little fuzzy thing on the floor between us. We have a guest with us today. That's Hardy, the bankruptcy beast, all 105 pounds of him. You can see it, down there.
There, it's hard, isn't it? There it is. Yeah.
There he is. That's what he's usually doing, is sleeping. But he's in the studio with us today. Eric, I think maybe if we talk briefly about trust fund taxes, just to, show them that that's different than income taxes. So there's all different kinds of taxes that you could have that you might owe. And one of them...
We can talk about that. Why are there so many taxes, Jeff? That's for another show.
Yes, because the Internal Revenue Code is long.
Because the government spends a lot of money.
Yeah.
Okay, I'm sorry, but there are a lot of taxes, aren't there?
Yeah. If you have a tax like a sales tax, or you're an employer and you have withholding taxes that you owe, we call these things trust fund taxes, because in effect, you're given the money to hold until you send it to whoever it's supposed to go to, the federal government, the state, or whatever. And trust fund taxes, we cannot get rid of for you in a bankruptcy. That's one thing that we can't do, but we can include them in the bankruptcy. And a lot of times we can get rid of penalties and interest. And if you're unfortunate enough to owe any substantial amount of trust fund taxes, it could very well be that about half of what you owe is stuff we can get rid of in a bankruptcy because it's penalties and interest. And but the underlying tax you'd end up paying through the bankruptcy. And
it's a very affordable payment plan. If it's as good as you can get.
Absolutely. You'd have 5 years to pay it off. And the other good thing about dealing with taxes in a bankruptcy is you're protected. Right. Nothing bad is going to happen to you with a bankruptcy going on. If you're dealing with a company in California, they're just playing let's make a deal. And in the meantime, the IRS might stay off your back or they might not. But if there's bankruptcy going on, they're definitely going to leave you alone. They won't do anything to you, can't do anything to you while the bankruptcy is going on. And we've developed a plan for how you're going to pay whatever taxes you might have to pay.
That's exactly right. And remember, and I'm going to quote myself, in addition to working on that plan to repay the taxes, and those are the trust fund taxes you're talking about. When you mention sales tax, just to be clear, it's not someone who bought something, it's someone who's selling something, charging sales tax, which
Right.
you have to pass on. And of course, same with income tax. We're talking about right now, withholding taxes. You're the employer, you took money from your employee, and now you just don't have it to pay the IRS. Those are two of the most common examples of trust fund taxes that we speak to clients about. Chances are, if you owe that money to the IRS and to New Jersey, you have other debt. And that's why we can really do a comprehensive payment plan where we're also going to get rid of your credit cards, your medical bills, and your other debts while working on a payment plan to repay the withholding. And that works. But Jeff, I guess most of the people who see us with tax problems, it's, what should I say, ordinary income tax issues?
Yes.
And we can help with those too.
Absolutely. We, if you're behind with income taxes, there's a lot of little rules about what we can get rid of and what we can't, and stuff like that. And we're not going to go over all of them because it'll get confusing. But fundamentally, if you owe income taxes either to the state or the federal government, we can include them in a bankruptcy. If the tax is more than 3 years old and you filed the return at least 2 years before the bankruptcy was filed, we can get rid of the tax for you.
Both.
The whole thing.
Go through that again. All right. It's the 3 and 2. It takes time to understand what has to be 3 years old, Jeff. And let's give an example. Okay.
Okay. You have to have filed the taxes at least, you need 3 years between when the taxes were supposed to be filed,
right,
and when the bankruptcy is filed. So let's say you're in a particular year and you get an extension to October 15th.
Well, you're making it more complicated now. Okay.
Well,
all right.
And so you get the extension. So your taxes aren't due until October 15th. It's April 30th right now, and you, in a flurry of activity, get the taxes together and get them filed on the 30th of April. But you didn't have to file them until October 15th. So you need to get to October 15th and then have 3 more years go by before the bankruptcy is filed if you want to get rid of those taxes.
So specifically, in Jeff's example, when you actually filed for an extension, if this was for 2017 taxes, they would be due April 15th, 2021. They would be due right now. And I'm sorry, April 15, 2017 taxes would be April 15, 2018, right? You had 3 years. That's what I was trying to say.
Okay.
We're beyond that to April 15, 2021.
Yeah.
In Jeff's example, though, had you applied for an extension, it would be bad to file bankruptcy yet. Because the first rule, remember, it's the 3-year and the 2-year rule. To get past the 3-year rule for 2017 taxes with an extension, you'd have to wait 3 years past October 15, 2018 or October 16, 2021, right? That's the 3-year rule.
Yeah.
Now tell me about the 2-year rule.
2-year rule, you just have to have filed. The tax, it says that the taxes have to be assessed, but filing it's kind of an assessment. That anyway,
for our purposes.
Yeah, for our purposes today, if you file the taxes at least 2 years before you file the bankruptcy, then you've satisfied that 2-year rule, if you will.
3-year rule, 2-year rule. And before we talk about what messes up both rules, which is, of course, when they have a lien against you, let's talk about your book, Jeff.
Okay.
Why I want to bring up the book is there's a chapter in here about taxes.
All about taxes.
And if you're having income tax or other tax questions, call our office right now. I bet the phone number is going to show up. I knew it was. call our office right now, tell them you're having income tax issues and you want a copy of Jeff's book. The book is free. There's no obligation. And we're going to talk to you in this book clearly about what we can do in a bankruptcy case to get rid of certain income taxes.
That's right.
The 3-year rule, the 2-year rule. And you know what's next, Jeff? The exception that messes up the 3-year and 2-year rules. And that is typically when a client comes in and the IRS is garnishing the client's wages, then we know something bad has occurred. It blows up the 3-year and the 2-year rule.
It's called an IRS lien.
Yeah. And when that happens, we can still get rid of taxes without repayment if the taxes are 3 years old and they've been filed for 2 years. But if you have assets, you have to buy, where's my quotes? Thank you. I need yours. Yeah. You have to buy your assets back from the IRS. Doesn't sound, it's not literal, but you have to pay the IRS amount equal to your assets.
Yeah, that's right. Through the Chapter 13
Again,
trustee.
we're given 5 years to do that. It's as good as you can do. So if someone comes in and sees Jeff, they have an IRS lien, and we know they have a lien because there's a wage garnishment.
Right.
First thing that happens, IRS lien is done. IRS wage garnishment is done, pardon me, right? They see you on a Monday. Hopefully by that Friday, you are getting full pay.
Mm-hmm.
It's a very important concept. Automatic stay works as to the IRS. So the wage garnishment stopped. Now, if you have a lien, we are not going to file. If you have a lien against you in favor of the IRS, chances are we are not going to file a Chapter 7. We're going to do the payment plan bankruptcy, Chapter 13. Measure your assets and add to that measurement of assets any taxes that are less than 3 years old that you owe. And that would be paid back through a bankruptcy plan over 3, 4, 5 years, probably 5 years. Other taxes will go poof. What do I mean by other taxes? Taxes that are more than 3 years old, but you don't have assets to cover the lien. The lien just drops off and you don't have to pay those taxes.
Right.
And at the end of the bankruptcy case, 5 years seems like a long time, but it's not. How long have we been doing this? 35 years?
Yeah.
So 5 years isn't a long time. So at the end of 5 years, the IRS debt is discharged. The IRS removes its lien against you, and you get a fresh start.
Mm-hmm.
You don't have to worry about IRS wage garnishment ever again.
Right. That's right. And IRS liens, generally people are going to know they have a lien. I mean, certainly if the IRS is taking money out of your pay, you know there's a lien. All they have to do is file this thing. There's no court proceeding for them to get a judgment against you or anything like that. They just record this lien, this thing, and it's a lien. And an IRS lien is a lien against everything you own. Everything. Real estate, personal property, money in bank accounts, everything. If you own homes in 3 different places like our president does, then the IRS lien would cover all of those places, regardless of where they were. And we keep that in mind. And when we're doing a Chapter 13, we want to hopefully get the value of what you owe below what you owe the IRS so that we can get rid of some of what that lien is attached to.
That's called a cram down. We're allowed to cram down the IRS secured claim to the value. And this is what Jeff was talking about 10 minutes ago. Stuff gets complicated. It's a case-by-case basis.
Yeah.
And maybe I brought up the lien stuff too much, but I wanted to explain that generally we get rid of income taxes if the tax is 3 years old and it's been in the IRS's possession for 2 years.
Right. That's
the general rule, and it applies to most people. Mm-hmm. Now, if you have a lien against you, it's more complicated.
Yeah, it certainly is, but it's something that we can do. And this stuff, it does get complicated. And like I said earlier, we're not going to go over everything. We can't in 20 minutes. And you don't have to remember all the stuff that we're saying today. what you need to remember is if you owe the IRS money, come see us.
Right.
And we'll look at what it is and tell you exactly what we can do and what we can't do.
Jeff, most of what we spoke about is consistent if you owe New Jersey, state of New Jersey money as well for income taxes or withholding taxes. We touched briefly upon sales tax. There is not yet a national sales tax, but there is a state sales tax. And of course, most of the people who see us who have sales tax issues, as I explained, are people that sell things, charge the sales tax, and just don't have the money to pay New Jersey. And that's a trust fund tax. And we can work on payment plans with that. New Jersey also has an income tax. Their lien is a little different than the IRS lien. But the point about New Jersey's income tax that I want to stress is it's the same rule as the IRS. If it's more than 3 years old and New Jersey's had it for 2 years, we can get rid of it.
Exactly. But if the state of New Jersey has filed a lien, and again, it's the same, it's about as complicated as the IRS doing it. They just have to file a piece of paper and bam, they've got a lien. But a New Jersey state lien only applies to real estate that you own in New Jersey. That's it. Real estate that you own elsewhere, how much furniture you have, other personal belongings, none of that stuff is covered. It's just equity in real estate in New Jersey. And, you know, a lot of times, I mean, you might own a house and not have any equity in the property, and we can get rid of the New Jersey lien completely normally when a taxing authority has a lien, we've probably gone beyond the 3-year period generally.
I think you're probably right.
Yeah, but and they've had the return probably for 2 years, but that's I don't know. So what happens if taxes are less than 3 years old or have not been filed yet, Eric?
Well, it can be complicated, but for the most part, in our Chapter 13 practice now, the trustees are insisting that all federal and state tax returns, all federal tax returns are filed, and New Jersey tax returns, at least the last 3 years, are filed, 4 years at times, before they will allow the case to continue to confirmation or approval. In other words, we can't propose a plan until tax returns are filed. We have something called a tax declaration sheet if you did not earn enough income, which is taxable, to require or necessitate the filing of a tax return. We can have you sign that document in lieu of a tax return, but otherwise, in order for your case to be confirmed by your bankruptcy judge or by your Chapter 13 trustee, you're going to have to file the tax returns. And the good thing is there's no collection actions happening while we're telling you to file the tax returns. So you can have a mess going on because you haven't filed tax returns for 2 to 3 years, 4 years, and people are calling you and the IRS in New Jersey and everybody's knocking on your door and your accountant wants money and everybody wants money from you. Pause. The filing of a bankruptcy is like a teaspoon in a boiling cup of hot tea. You try to drink that tea, it's just too hot. File bankruptcy. We give you time to stir the cup, take out the teaspoon, blow on it, and now things go slow and cool and calmly. And we work on an arrangement where you file the tax returns within a reasonable time. You have to anyway. And you really want to. It fixes you up for Social Security if you become disabled. It puts you in compliance with New Jersey and the IRS. You're going to have to do it anyway. So do it with us in the context of a bankruptcy, and things relax. Okay? Now, you're going to have to pay back those taxes if they're less than 3 years old, regardless of 3 or 2 year rule, as we talked about. If it's less than 3 years old and you owe taxes, you work on a payment plan that we develop with you and with your Chapter 13 trustee, but we're the ones who develop them with you, where you'll pay back the IRS or New Jersey for those last 3 years over a payment plan. And it can be up to 5 years, as we've talked about a lot today. And it's penalties drop off. That's not a tax. A penalty isn't a tax. A penalty is a penalty. You don't have to pay back. Interest, does that continue? I don't think so. It's been our position. It's pretty much been accepted by New Jersey and the IRS. that interest, especially if there's no lien, there's no interest. The interest follows the interest may follow the tax, but we've been able to stop interest, penalties drop off, and it's a payment plan over 3 to 5 years. It really works. I gave you a really long answer to that, but I think there was a couple parts I missed.
Well, no, I think you did. I think you did pretty well.
Okay, thanks.
Now, we're getting close to our time,
it is.
but one thing maybe we should point out would be about if you go into the bankruptcy and you've not filed taxes in a while and you filed them, then what happens?
Well, that's bad. And I have a phone call this afternoon with a client, unfortunately. And this is what happens. Remember, the tax has to be 3 years old to be forgivable and been filed for 2 years. But what if the tax is 7 years old and you file bankruptcy?
And you've never filed a return.
And you never filed the return, you then have to file it. Remember, we talked about trustee insisted this filed it, and you owe $5,000. The trustee will not allow a plan to pay that tax
because it's just an unsecured debt, and it's not dischargeable. You can't get rid of it, but it's an unsecured debt, and the trustee and the bankruptcy code, there's no provision there for saying for non-dischargeable debts, I'll pay those, but the ones that are dischargeable, I won't.
It's just priority or non-priority. So if it's a old tax that would be dischargeable, but for the fact you failed to file until late, you'll have the advantage of a 3 to 5 year payment plan. On the other taxes, they cannot do any collection action against you during this time.
Right.
But at the end of those 5 years, when you're discharged of all your debts, it'll be, I guess the best example would be it'd be just like, well, student loan, really. The student loan creditor can't collect from you while you're in bankruptcy. Mm-hmm. You're protected, but at the end of the day,
you still owe the money.
And that's a shame with an unfiled more than 2-year-old tax, a more than 3-year-old tax return. Jeff, before we go, I did want just to remind people that this is complicated. We know it. Okay. If you want to start, just give us a call and ask for Jeff's book. Okay. It's a nice chapter in there about taxes. Call, get a free book. We'll send it to you. No obligation. Or if you want, we're available most of the time at 856-546-9696. Just ask for an appointment to speak to one of us.
Yeah.
We'll gladly speak to you about this.
And talk about it. Let me give you, in closing, an example of somebody that we helped once upon a time. A gentleman came in to see me. He had some debts, other debts besides taxes, but that was the number one problem. And he owed more than $200,000 to the IRS. And I looked at it and we wrote down everything about when returns were filed and how old, so that figure out how old they are and all that other stuff. And I realized I could get rid of about $200,000 worth of taxes. And maybe he'd have $10,000 left that he could pay to the trustee over 5 years. And there was something, and I don't even remember what it was a little iffy in that case. And the IRS actually sent up somebody from the Department of Justice, an attorney from Washington, for this one case. And I won. And so the guy got rid of $200,000 in taxes. And I brought my daughter, who worked for us at the time, to court with me. And she said, Daddy, I knew it was an important case when the other guy said he represented the United States of America.
And we represent John and Jane Smith all the time, though,
That's
Jeff,
right.
And it's very rewarding.
Yeah, it sure is. So that's about it for today. We didn't mean to confuse you. If you have tax problems, call us and we can sort them out for you. And next week, I think we're going to skip our program because of Memorial Day weekend. A lot of people aren't going to be around, but we'll pick up with it the Thursday after that. So 2 weeks from today.
The first Thursday of June, we'll be back.
Right. And then I think in July, we're going to have a special treat for you. We're going to have Phil Tyrone as a guest. And he's the one that that helps us fix our clients' credit reports. And like we've talked about before, if you do a bankruptcy with us, we'll send you to Phil for free. We pay money to him every month, but we won't charge you a dime to go through his program. And he tries to get your credit score up to 720. And generally, he's pretty successful with that. But he's going to be on our show remotely and can talk all about that and how he does it and stuff like that. So that's pretty exciting. And it'll be sometime in July.
Good.
So until not next week, but the week after, stay safe and God bless.